All right, what is going on, traders? This is my trade recap for 5-1. No, what was the date? Uh, yeah, today's, yeah. For the week of 5-3-19. A little bit jumbled up. I'm on the West Coast. Currently, I'm in Las Vegas with my girlfriend right now. And just taking a quick moment to go over my trades for me for this week. Slower week. I have quite a few positions on, quite a few swings. Closed out some of them. Took some shorter term, um, some trades that were more intraday that kind of turned into swings. And so we'll go over that. First, let's look at the P&L for this week. So I only, as you see, on 4/30/19 and 5/1/19, those were the only days that I closed out any positions for a whopping grand total of $755 for this week. So nothing crazy by any means. Pretty slow week, but like I said, I have quite a bit of unrealized profit on the table that I haven't taken off yet just because I'm letting some of these trades transpire. So anyways, let's go into the trades for this week. Very first thing that we're going to look at is Netflix. And so as you guys remember from last week, I was talking about this RTZ strategy. And I actually, it's funny, I used Netflix as kind of the demo last week for that RTZ strategy. I was looking for that 380 push last week, and I was just a little bit too early. Coming into this week on Monday, this was, to me, pretty significant how we were respecting these 366 level right here, holding this 50-day moving average. And we just had this nice little, inside consolidation in here. And so this is an ideal setup for an RTZ because, again, for an RTZ to work, you need that momentum. And so, having this shorter term, few inside days, you're going to get a push in either direction. And it's pretty binary. It's like either you get the right direction or you do not. And hopefully you let your RTZ run for multiples of, 200, 300%. That way, those times that you get those trades that go literally to zero, it makes more than makes up for it. So let's pull up the hourly. I took the 380 weekly calls on Netflix, and my computer's being a little slow here. So I took this on 430. So as you guys see, my entry was not ideal, to be honest. I got into this push up in here in the 373 area. When we broke out of this hourly candle high, I thought we were going to get that move up to 380. And, actually, no. This was on Monday. My bad. I took this on Monday. And a little bit of the inverse, actually. I took it on this flush, I believe, and took it a little too early on here and actually had to take some heat on it. And I thought this trade was going to go to zero, to be honest, just the way we were acting. But we started to firm up in the middle of the day, kind of sold off in after hours. The overall market was just looking a little shaky. We're so frothy, just sitting up at highs, that it's a little bit sketchy. And so I honestly thought this thing was going to go to zero. We put in this really interesting candle right above or right next to that hourly high. So I figured, this is probably going to go nowhere. Then again, come Tuesday, we respected this 368 level, 366 in that range. And then Wednesday, we just had this giant push, and I sold up into the 383s, I believe. Actually, not a huge gain. Being that, I held this from Monday till Wednesday, theta definitely started to chew through this. So it was only about 100% gain. And so I didn't really get that big multiple, that 1 to 4x or 2 to 4x kind of range. So it wasn't an incredible trade, but definitely a lot better compared to last week, especially because I got into this trade. It looked like it wasn't going to work, but I said, you know what, this is an RTZ trade. Just respect the strategy. Do not take it off. And then I abided by my rules, and it worked out, which was beautiful. Ended up not being able to get much past 384. Then on Thursday, we had that ridiculous sell-off in the market. And then obviously Friday recovered all that and some. But again, we're just stalling at that 385 level. So definitely something to watch. If we get through this 400, this thing, is just going to be incredible. And in my opinion, it's a given that we get there. It really just depends on what the Qs want to do. It looks like the Qs want to break this 191 area that we've been teasing with for a little bit and just keep on ripping. So odds are Netflix is going to follow suit, and that 400 is going to get taken out in no time. So definitely something I'll be eyeing coming into next week. Would not mind building in a little bit of a longer term position. Nothing too far out of the money, and probably nothing too far in a time frame. I'd probably be looking at like the monthly options on this, and using like the 410s or something along those lines. Could probably get a pretty nice risk to reward. We'll see what Monday brings on that. Next one was Hoya. As you guys will quickly find out, I like to pronounce all of my tickers. This thing is just a real stinker. I'll pull up the 15-minute on this. So I've actually been in this off this 22 level, and we've just been toying around with it, toying around. And I think this is a beautiful pattern. I just think in most cases it's better to take equity on this instead of trading options, because all this consolidation, I got in here about 2 weeks ago, and Theta likes, or a week and a half ago, Theta likes to chew into that. And so this is definitely a position where equities would be a lot more favorable. But we got this big old juicy push on Tuesday. This thing went bananas. I was up unrealized about 800, 900 on this trade. And then on Wednesday, it just crapped the bed and retraced the entirety of that move. I took it off it was about a $50 profit. It was just slightly above my entry. I was in 10 contracts on this. I had the 25 calls. They were expiring in June, but just because I've held this for so long, I wanted us to at least respect, the 2350s. We've got some pretty good consolidation in here, a little bit of support there. I figured that should be respected, and it just couldn't do it. And it was so strong on Tuesday, and it just absolutely let all of that go. So I had no problem taking that off. Was eyeing this for an entry, was actually busy on Thursday, so missed this nice bounce off the 2220s, which fared really nicely, especially on the daily. This is the kind of trade where I like to watch the close on this, and when you look like you're about to close, it's like the last 30 minutes of the day, and you're getting this really nice hammer candle. That's a great sign. And so this is something that, again, I'll be watching into next week. I think a retest of these 30s is absolutely in the cards. There's been a lot of sweepers coming into this, some bigger money guys for the last few months. And so I think this thing is going to definitely wake up. Really depends on what China wants to do. This is obviously a Chinese stock, and so very affected by any changes over there, or just the U.S. sentiment towards China. And so it can be driven by news quite a bit, which can be frustrating. Other one which kind of played out very similar to that was PYX. Talked about this in my last trade recap. Been in this, just swinging in and out of multiple positions off of this day here, 423. What did I have? I had the 25 calls on this expiring in June. We'll bring this down a little bit to the 15-minute mark. Scaled out of half on this day right here on Wednesday. Wanted us to see us kind of build something a little more constructive and hold this 2250 level, and obviously just couldn't do it, and it had a really hard time getting into the 2350s. It just kept on pinging off this. And so once we started to rotate lower on some pretty substantial volumes, you'll see, the 130,000 shares trade on this 15-minute candle is ridiculous for this stock. That's a lot of volume. This thing has got a 9 million share float. It's absolutely tiny. That was my sign to take off half. So I took off half, again, for a small $50 profit. Other half I'm going to RTZ. I'm pretty much down, $300 on the trade currently. I will let that expire to 0. Again, I have time on my side. This thing may play out, but it's within my risk parameters to allow that to go to 0, and so I will do just that. So yeah, very, very disappointing actually. I had a lot of belief that this thing could really get going and start reclaiming some levels here, and it looked so constructive as we were just kind of building and consolidating over that 50-day moving average. We were holding what was once resistance, and we were hugging that pretty nicely, and then we just could not get any continuation. So we'll see what this does next week. If we build a nice pattern and break out of this 24 mark, I will have no fear to actually swing some longer term calls on this, maybe somewhere in the September range, maybe even December, and I would probably be looking into the 40s. I'm not by any means a fundamental expert, but just kind of going through some of their filings, looking at their earnings reports, looking at their balances. Pretty sound company for the most part. I kind of like the direction they're heading in, and I try not to let that get me too biased in my decisions. But I wouldn't mind swinging this a little bit longer term if the technicals line up. So definitely something which I will continue to watch. TTD, my goodness, what a beautiful, beautiful stock this has been. This is just that classic, multiple days of rest, inside candles. Took this on Wednesday, and this was actually just a little day trade for me. Took this on Wednesday. My thesis on this is if we could hold the 220s, I have no problem getting long for a break of the 226 level, and once we break that, it's kind of all signs a go. So what we did here was flushed into the 220s, reclaimed, took the 225 calls, and then just took it off. I was boarding a flight at this time, and I took it off in like the 224 region, mainly just because the market looked a little blah at that time. I didn't really feel too comfortable about just having any more long risk. I had quite a few in my basket, and so decided to take this off. Hindsight, I think my management on this was kind of weak. I got into this for a shorter term swing, was looking for a break of 225. I didn't really have any indication on this thing that it wasn't going to break 225. I just was a little bit fearful because really my unrealized loss on a few other positions definitely dictated how I managed this, which was really, really unfortunate. As you can see, we're just making higher low, higher low, higher low. We actually got into the 230s today. So bit disappointed. My size was small on this, again, just because I wanted to kind of mitigate some of my long risk. So I was in a smaller position on this, and I claimed like a nice 20% gain on it, and so I had no fear taking that off. But again, I was a bit dictated by my unrealized loss in a few other swings, and by my unrealized gain on this, and the fact that I was boarding a flight. So on one hand, you can't be disappointed about trading safely. On the other hand, though, I think being systematic in your approach and really following the plan that you set for yourself is so incredibly important. As traders, we live and die by that. That is our guiding light. So I think that's really what is the ultimate thing to take away from this, and I didn't do that on this trade. Next one was AVGO. Gorgeous, gorgeous, gorgeous stock. Again, this is another one like Trade Desk, which has just been so unbelievably strong. It's just that classic earnings gap and go. It's been running, and got a little bit of rest here. Came into this, what was this? Yeah, it was close to that 300 psychological number. Had a little bit of support there. And once I saw this hammer form, I believe that was last Friday, and then Monday we gapped up a bit. And I'll bring this in. Monday we gapped up a bit. I got long the 320 calls, I believe, on this one. I'll have to double check. It was either the 320s or the 315s. Regardless, it's not too important. What I really want to look at is the management on this. This thing, as any good trade, it typically works pretty quickly, and this gave me all green signs from here. Worked, right off the bat. My risk was going to be closer to this like 310, 308 number, depending on how we acted. It was kind of like an over-under stop. And what I ended up doing was on Tuesday, market was, again, looking a little bit funky, and we popped over these highs around the 315s, and then retraced, broke morning lows, and I actually got out into here. I believe it was like a $200 to $300 gain on this one, and just ended up, kept on running. And so really, I think the piece here is not micromanaging this and setting maybe like a hard stop and allowing this to work. Again, not trading your P&L is pretty critical for me. So, these big cap stocks are obviously so correlated to what the broader indexes are doing. But again, don't use the Qs or don't use the SPYs purely to manage the position that you're in. It's just, in most cases, it isn't going to serve you. If we look at the Qs from yesterday to today, there, I was pretty diligent in the fact that I set hard stops in my swings and said, these are my numbers. I will get out if they come to this. But looking at just the action on Thursday, if I was going off of purely what the cues were doing and what my swings were doing, this would have been all signs to get out. And then here we come Friday and just go absolutely bananas. And a lot of those trades which I had hard stops in are now super, super green and looking really fruitful for next week and really the coming weeks. So yeah, a good lesson there. Sometimes I find myself, or a good lesson for myself, I find myself using the indexes a little too heavily to gauge sentiment and kind of trying to predict what we're going to do the next few days. And really what you need to focus on is the ticker that you're trading, following your risk profiles, and following the plan that you set out. And so while I was green on pretty much everything that I closed out this week, it's a similar story of what I've been struggling with, and that's just trade management and really abiding by your plan, because it's not about hitting super, super consistent trades. And that's something that I've been doing, where it's like my win rate is so high, but I don't let the good trades work. I just minimize them too quickly. And so those trades that are in the thousands of dollars, or maybe even close to five figures, I minimize them before they can even get to that point. So a little bit unfortunate. One thing I want to just show you guys is what I'm holding into next week. I have a longer term swing on Facebook, 210 calls expiring in June. Really like this action. My stop on this was beneath this candle, towards like the 188, 189 level. We got really close on Thursday, and just a beautiful setup. I really like what we're doing here. I think we're going to get that gap and go. And if not, totally okay, but I enjoy how this is looking. And I think their earnings were pretty phenomenal. They're having some wonky security issues coming out, and not security, but privacy stuff coming out, which is something they've been tackling with for a long time. So I'm a little bit nervous just as far as any headline risk, but technically this looks phenomenal. Other one that I'm holding is QCOM. I have the 95 calls on this one. Oh, sorry, no, I have the 90 calls on this one. Earnings were interesting on this just because the market was so weak on this day that it just couldn't hold these gains, and we kissed that 90 level and then faded down to pretty much opening lows down here. And a softer day today, but I like the action. Very easily could have faded off of the action on Thursday, and so we held pretty nicely, just a tight little inside day. In my opinion, this thing's going to 100. I mean, if you look at the statistics, when a stock gets to 90, it's like 60% of the time it ends up getting to 100. It might even be closer to 70% of the time it gets to 100. So again, that's not a huge sample size. The research that I've seen is looking at a couple hundred trades, but this is looking really well. And factoring in the fundamentals, it's just a beautiful setup. And again, something I talk about often, but this gap up, go kind of strategy, and then we also have earnings within here. There's just a lot of meat on the bone, I believe. And if we look at the weekly chart on this, and we'll go back a little bit more, 100 is the previous high. We'll go back even more. My goodness. Yeah, how far back do we have to go here? The max available. Yeah. Back in the dot-com boom, 100 was the high, and so it'd be really interesting to see how we react to that level. Yeah, may blow past that, and we may not, but should be exciting. Other thing that I have is T-Doc. Interesting setup here. Earnings were mixed, but we respected this 50-day moving average, and we had just a little bit of consolidation on Thursday. I actually took this on the day of the earnings. I took it into here once we started kind of building around the 57s. I have the 60 calls on this one expiring in May. This is a shorter term trade for me. Curious how we react at that 64 level and see if we break from there. So I'm holding that, as well as I have a short on WAB. It's just kind of muddling around currently. I also have, let's see, what else am I holding? Oh yeah, I have a long on IQ. This is firming up really nicely. Another Chinese name, kind of following that same Hoya setup. I believe that may be all that I'm holding currently. I have a little bit of a hedge on the Qs. I have I'm long some puts on this. These are RTZ. Again, purely a hedge. These will probably expire worthless. Not huge size by any means. I believe I'm holding 5 contracts of the 185 puts on this. Those are expiring at May 17th. And I believe that is all I'm holding currently. Oh, sorry. I also have BMY. Got in off these lows. Been holding this for a while in the 45s. I have the 49 calls expiring in June. Strong day. This was fundamental. They had some really positive news come out, something about a rating and buying Celgene or something along those lines. Billy, beautiful. We've been consolidating for a dog's age. I got the 20 calls on this expiring in August, I believe. Again, a much longer term trade for me. There's been a lot of sweepers coming into this all throughout this consolidation for months. And yeah, that's all I'm holding currently. Anyways, guys, hope this was insightful. I know this was a bit more rambly than last time. I don't have my normal trade setup in front of me, so some of the numbers that I gave for entries as well as the strikes that I was taking were a little bit off. So excuse me for that, but I'm just going off of my laptop and I don't have my full setup. So anyways, guys, I'm going to go enjoy Vegas. Hope everyone has a great weekend, and I'll see you guys next week.